not, so you can confirm with them. But based on the price level is if $99, that will be ebook with homework, I guess, if they not change it. Okay, if the other price lower than that, maybe only homework, not include ebook. All right, so that's a couple of things. If unless you have any question, let me know.
No, we.
What's that? Okay, so you have question, let me know. Okay, I didn't hear you. What do you mean? What do you say? But let me know. All right, so otherwise we okay. We have everything settled down. We have homework. We have PowerPoint there. I think so far we are done the first of the class, which is supposed to be cover syllabus, everything. Okay, so let's go. Let's see why we start this course, right? Why we study money, banking, financial markets. Okay, so let me hear from you. Okay, so why you want to learn this course? What can you think could be look like? What do you want to know? Now we'll tell you, do we cover what do you want to know or not, right? So what do you think you're curious about this course? Anybody want to tell me? So what do you, just tell me what are you thinking about why I want to take this course?
I want to learn how the Fed's decisions will affect my future and the future of, the economy and the country around me.
Okay, very good. Exactly. You get the point. It is true, actually. They didn't mention, see the book title didn't mention, say, money, banking, financial market, didn't say Fed. Actually, we do a lot of regarding Fed decision, how money works, how they provide money supply, and how they decided the Fed fund rate. We will mention about that. That's very critical moment, how they decide the interest rate. So actually all surrounding Fed decision, but they didn't mention the title. So it's very good. You got it. Very good. So any other, why you learn this course? What do you want to know from this course? Anybody else? Go ahead, Jim. You want to say something? Don't be shy. This course will probably be fun. So just say anything you want, you talk anything you want when we debate, and I give you some highlights, happy hour, certain things.
Yeah, my apologies. I was eating some almonds, so I did not want to choke as I was talking. But no, I think I'm really looking forward to the course, obviously, because of the type of topics and subjects we will be referring to. Obviously, money. I'm pretty all here because of money, including yourself.
Yes.
Fortunately, that's how it works. Bank, obviously, of course, interest rate. We all deal with bank accounts, and we all affected by obviously the things that the federal does as well. And market, I know that even though not everyone is familiar with it, it's definitely good to know about it because it's the market also affects not just the private and business where people invest, but also the private ones.
Yes.
I'm really looking forward to it and maybe learn a little more about those topics.
Yeah. Okay. Very good. It is true. All right. Means it's not just for you say I want to get my GPA good score, something like that. Not beyond that. And also actually for yourself, say for example, Fed decision, the very, very important because affect to everybody, maybe affect to the plumbers, affect the student, affect to your money put a saving account, affect to everybody. And then doesn't matter, you go to anywhere, you have to know what's the macroeconomy, what's the monetary policy, gonna be any moment affect your decision. Any decision, you open restaurant, you're going to base on what they're going to do, what the inflation going to be, what the minimum wage, all those things is surrounding your daily life. So actually useful. This course is very useful personally. It's really not say, give you tools, say, like you learn corporate finance or learn something else. It's a tool to use it. This really give you a macro idea. And then you can from here build up knowledge and then make a macro decision. Okay, it's very helpful, very handy. but still you have to have motivation. Why I want to know, right? So therefore, you will study hard. You want to know a little bit of tedious detail, but the macro point view is there. Okay, that's how we process dealing with detail. Then we understand the big picture. Okay, that's very good. We both are very good on the purpose why we started this course, right? So obviously, like I said, money. We will have chapter talk about money. Very, very important, because right now becoming e-money, it is so popular. So we will go there and you will see, and especially your generation, I'm sure going to be e-money very, very popular in your life. So therefore, we will focus on that, the money, right? And then banking. So if banking is not important, why we bail out them? Right? We should not even bail out them. They screw up the society and the market, the world. They should have failed. Let them fail. But we bail out them. We want them to survive. Why? So therefore, we're going to understand this banking, why they need to bail out them and why it is so important to our life. Then these should be improved. That's what we did improve it, okay? Like banking regulations, banking stress testing. We will talk about that too. And that's what financial markets, all this link to money have to go through the market, right? So everything banking is in the middle, still linked to the markets. So we had no way out. We had to talk about markets, financial markets, how they do the IPOs, how they raising capitals, so that's the whole thing. Fed is not just sit on there. Fed linked to the money and the financial markets. So Fed decision affect everything. So that's why we all have to cover those things. So that's how we studied this course, right? So let's go to detail. All right, so give you a preview. So tell you what are we going to do, right? First of all, tell you financial market inside. Financial markets is huge. You have everything, have all kind of financial investment instruments, okay, a lot. But here trying to say, for example, bonds, stocks, foreign exchange markets. So that means we're going to check. We're going to check about the stock markets, okay? Because although stock market is not like only way to raising capital for the corporation, but it is big. Everybody talk about this evening news reported. So sounds like very important to us. Wealth, investment. So stock and the bonds, we will talk about it a little bit of detail. Why we care about that? Because when Fed make a decision, you will see the traders read the Fed statements line by line, just see whether they change a word. Even they change a word, they're trying to find out what that means. If that means they're going to be higher interest rate or lower interest rate. Once they change the word, and then if they find out the solution, they ask them, right? They ask questions. You see, when Fed make decision, they have conference for half hour answer questions. People ask, say, why you change that word? Or remove out that word, and the Fed chairman have to say what's going on, right? They cannot move the market. They cannot tank the market. But sometimes they do. When Fed make decision, market tank or market jump, either way. So Fed trying to calm down, don't change it, everything's okay, like that way. So it's very, very delicate, okay? So that's what we're gonna do is they affect to stock and the bonds, okay? So that's the one thing. But foreign exchange markets, so because we global, right? We already globalization, and we have, let me ask you, do you know how big foreign exchange markets means? How big means use dollar amount to measure. How big a foreign exchange markets you can think of? I see what you know. There's a question for you. How big? Give me guessing in dollar.
1 trillion.
Okay, very good. 1 trillion and 100 trillion, 4 trillion. Okay, 4 trillion. So after pandemic, maybe going to be more, right? So before the pandemic is 4 trillion. Right now we global print a lot of international. Right now actually is, remember we are every country trying to deal in their own problem. Maybe just stay there, but once open up, maybe even bigger, right? So $4 trillion daily, okay, foreign exchange market before pandemic, $4 trillion daily transaction. So let's see how big is the foreign exchange market. Very big, okay? Globalization, international markets, financial market, not just US, global, all is working 24/7. So it's big, okay, very big. So we're gonna check on those things, right? So yes, go ahead. Go ahead. You want to talk about arbitrage? Arbitrage, you want arbitrage what? Oh, you want to know the definition. You answered already? Okay. All right. So financial institution. Okay. So we want to check in. Remember this, no matter what happens, you have financial institutions in the between. Without your money not directly go to your hands. You need to go to banking. That means financial institutions, corporations raising capital, like let's say Uber raising capital. They need to go to the investment banking, financial institution there in the middle, do this whole operations, right? So there are 4 financial institutions also very important, okay? So they say such as the banks. You see, when they talk about banks, these banks refer to commercial bank, depository bank, okay? Now they refer to investment bank. It's different, right? Now you know now, right? So you can see, you go to JP Morgan, you can deposit your money. You can go to the branch, all right? It's your bank. Go there, deposit your money. You cannot go to Goldman Sachs. So I walk in, I want to deposit money. They don't do it. They don't do that business. They do not do depository institution business. They do only investment banking business. And we will talk about what the investment banking doing, right? So you can see the difference now, because you're right now informed, banking right now is different, have different kind of bank, okay? Now we will talk about other financial institutions. For example, insurance. Insurance, you think about not big popular name, not big fuzz every day. Actually, they're very big, okay? They have a lot of money, because you and me, we pay monthly. You have health insurance, you have a flood insurance, fire insurance, life insurance, a lot of insurance. They collect the money just every month, and they collect a lot of money. But they're, remember, everywhere. Money never sleep. They use the money immediately turning around and investing in capital markets. So therefore, you can see all those in this market is circulating around, the money floating around, investing here and there, collect from here and there, okay? So therefore, you can see this market, very important. We have to figure out, okay? The next one is, we're going to talk about money. Right, so still didn't mention the Fed. The money is not created from the, somewhere nobody knows. It's the Fed. It's the Fed is institution to operate the monetary policy. Okay, so they decided how to distribute the money in the society. Okay, and so they also make a decision. They do research. They have armies of PhD graduate student, right? Research on monetary policy, on economy. So we're going to talk about that too. Okay, so we're going to check on that piece as well. So a lot of work. Okay, so why we study financial markets? Yeah, because money linked to markets. Okay, and financial market is important. All right. So like for example, we say it's financial 2008 financial crisis. If it's not important, they won't bail out them, right? But that's the market, financial market linked to capital. All right. For example, you have a lot of money from your uncle. All right. You cannot just hold in hand or put it in somewhere. Let's say you put it under the mattress. It's not working well. You put it in the bank on the deposits. Maybe okay. You can put it there. That's financial market institution there, right? So maybe you even want more, you invest in the stock market, right? Or bond market or somewhere, you invest to make more money, right? So you need to put your money in somewhere work. Okay. So what that mean though, see, look, financial market, they channel the fund. You have that money, $100 or $1,000 your uncle gave to you. You want to save it. So they put your money to transfer that other people to use the money, open restaurant, open business. And meanwhile, you earn actual interest. So that's how this is formed. So your actual capitals from savers transfer to the borrowers, okay? But you don't know it. You just earn interest, that's it. But money never sleep. Once you put the money there, this money already transferred to somebody else who need it, all right? And then you earn interest. So who happy to do that? It's the financial markets. Okay, let me mention again, so here to tell you, say financial markets, so transfer these funds, right? From people who have money, have extra money, excess money, more money, or you want to save it, to the people who need it or who want to run business, right? That's what you need a fund, right? It's a borrower, basically. So that's what the financial market can get this job done, all right? So best thing you know is raising capital, right? Every corporation who want to do IPOs, the raising capital, they go to market, financial market, selling the IPOs, initial public offerings, right? We will talk about this, okay? I'm just giving you an idea. When they're selling it, the raise capital means that's how they get $1 billion on the day one selling the stock, IPOs, right? And this $1 billion is theirs. They go to back home, back to the company to do business. If the Uber, they do their business, how to do the next project, and then your money invest on the Uber, and you're gonna have stock, like that's kind of money you give to them, and they're raising capital. So that's from you, okay, from somebody else, from who have extra money. But that's the only job is from financial markets, all right? So from there can get this done, all right? So that's how.
Professor, I have a quick question.
Yeah.
Do we have access to this PDF?
Yes, you do. In the content, go to the Blackboard.
Yes, I'm in it.
Yeah, on the left side, go all the way down. Did you see content there?
Oh, I see, in the content. Okay, I found.
Right.
Thank you very much.
You're welcome. All right, so that's the financial market, right? Let's go next one. So we go to bond market right now, all right? So when we talk about financial market, we said we have stock market, we have bond markets, right? So bond markets is another one. Although your every daily evening news not mention about bond market, what's going on. They only mention about stock markets, what's going on. But the bond market is huge. Okay, corporations, they really do business. They really raising money from bond market. Okay. Raising money means they can get the money from the investor, so then they can do their businesses. Like yesterday, Apple Corporation, right? Apple have a lot of money. If you look at Apple, they are $1 trillion corporation. They have a lot of cash. You look at the cash, they have billion dollar cash. But yesterday they're selling bond in the bond markets. Why they raising capital? They have money. Why they do it? Because interest is so low, they want to take advantage of the lower interest rate. Means they pay you nothing and borrow money from you, okay? And that's the bond market. So then they do that through there. We'll talk more. You're going to learn a lot of bond market, okay? We'll talk about this. So you see when I mentioned bond market, they link to interest rates. I just mentioned that because interest is low, that's why Apple raising capital, selling bond in the bond market. You see, link the interest rate. Bond interest rate is intertwined, must be bond price higher, interest is lower. We'll talk about this, you will learn more, okay? But at least they link to each other. Now, let's do about security, right? So I'm joking to my student, I say, some junior student haven't learned bond stock yet, but learn this course, have fun, but suddenly come to so deep. So then do not know what I mean security, okay? I joking, I said, don't forget it. Security is not downstairs in the security guard, take care of the building, take care of our health, security, safety. It's not that security, okay? In financial market, we call bond, stock, and other financial instruments. We call that called financial security. Okay, so that's what the security means. All right, just means financial assets. Okay, it is but we say financial instrument, it means can be any kind of asset, can be commodity, can be bond, stock, can be derivative, can be anything. Okay, but then they tell you this is financial security. Okay, now the safety guard security. Okay, bond. So what's a bond? Anybody learn bond already? Somebody learn bond already? Maybe take corporate bond, corporate finance already. Tell people what's a bond, how that works. Anybody learn that? Go ahead.
Yeah. Go ahead. Sorry.
Yeah, go ahead.
That's okay. Try to involve it. Go ahead.
Okay.
Now it's three of you. Go ahead.
So a bond is a coupon, essentially, that is a legal obligation for a company to pay you a percentage off of it. And if they are not able to, the company is legally liable for it.
Very good. Yes, very good. What about your other people to try to say something? Okay, so you two agree with him. Yes, okay. It is legal requirement. That means like once normally is the corporation selling the bond to investor, right? Let's say Apple Corporation issued a bond and you buy it, okay? You buy the bond. So corporation, when they issue the bond, normally this Apple borrow money from you. If you buy $1,000 bond, then Apple borrow money from you about $1,000, okay? But then they have legal statement that said that I will pay you, a promise to pay you, let's say 2% coupon, okay, a year, and I borrowed your money for, let's say 2 years, okay? So this is the statement in there. They cannot against it, like your classmates say, or, right? His name is Joe. So because, yes. How to pronounce your name? Oh?
Yes, it's just or.
Just or?
Yeah.
Okay. Yeah, thank you. Yeah. Easy to remember, right? Very, very interesting.
Yes.
Okay. Yeah. So then you had to pay the promise 2% coupon, and then you had to pay the principal because you borrow money from me, $1,000. You had to give me back at a maturity to end of 2 years. And that's the bond is debt you promise. But what if they default? So the company, if it default, that means they don't pay me. Once they file bankruptcy, right? Chapter 11. That means that's the whole point is file the bankruptcy. I file bankruptcy means I don't want to pay you anymore because I tell you I'm bankrupt. So that means I entitled don't pay you because I'm bankrupt. So once company fire this bankruptcy paper, then you lose everything. You don't have your principal anymore. So that's a risk there, okay? So we'll talk about detail about the default risk, but at least you know when you have bond, you have the bond, you get entitled, get a coupon, and get your money back in normal situation. This is writing in the legal documents. That's true. So then if they do not pay you, they can be only file bankruptcy. Otherwise, they have to pay you. Okay, so that's good. That's the legal document there. So that's bond. Bond is debt they borrow from you, from an investor. Okay, so that's true. Corporation issue the bond just to borrow money from you. That's the bond. Okay, we'll talk detail. You will learn a lot about a bond because the Fed make decision affect bonds, affect stock. That's why we had to mention all of this, okay? And next one is interest rate. Of course, interest rate very important, very, very important, okay? I suggest you go to Wall Street Journal, WSJ.com, right? WallStreetJournal.com. You go to market data, you're looking at a lot of interest rate, a lot. Okay, I think, let me see, I can do it. Because it's very important, we're gonna talk, interest rate is very, very important in this course, okay? So let me see whether I can do it. And let me just show you there. Okay, so you go Wall Street, you go to market. I don't know whether the June this system allow me to share with you from another system. Let me see. Market. See, they don't give me the data. Market. I don't know why they don't do this way. Market data. They give me market news, but don't give me market data. So anyway, so I don't want to waste my time here. So I cannot open that page. All right. So interest rate, okay, a lot. It's not just one. Here, I just mention one. You don't know, say which one. CD interest rate, your credit card interest rate, your debit card interest rate, mortgage. No, they didn't mention anyone. Okay, because that, like I said, it's a lot. When you open that page, you will see a lot. So interest rate is not one. Okay, but this is just to give you a general term. Interest rate is the cost of borrowing. Okay, you borrow money, you pay interest on that. Okay, but not necessarily right, because interest rate can be my saving rate, right? You put the CD, you put the money in the saving account, you make a 2%. That's interest rate too. It's not costing, that's a saving, right? So that's why you need to understand these things, not just the exactly like that way. Okay, if you borrow, it's the cost of borrowing. All right. So it means if you borrow money from me, I lend you $100, but that business, right? I can be your teacher, can be your friends, but same thing to business. In order to long-term relationship business, I will charge you. So that's you borrow $100, I charge you $2 for 1 year. This is $2 is interest rate. Okay, cost you. You're gonna pay me at the end of the year. You're gonna pay me 100 plus $2. That's the cost you. Like I said, okay, you can see where you put the money in. You put it in saving account. That's the saving rate. Okay, not necessarily cost, but that's interest rate. You depend on which way you see it. Okay, so the price paid for rental of the fund, like I rent my money, $100 to you. So we're going to learn a lot of this. This is very roughly give you some idea what's the security, what's the bond, what's interest. You're going to learn more detail, okay? So let's just touch it. Chapter 1 is very simple, touch everything, okay? But later on, you will come back again, learn those one in detail, okay? So here's very important. I'm training you thinking. We're going to use this, okay? You're going to use this chart again. So this gives you historical interest rate and many interest rate. Okay, like I say, I tell my student always like this way is learning, training yourself to be manager. Okay, let's say you have a staff give you a report and that's the chart. This chart, everybody see the same thing because the historical data. So everybody, if you download data, look at this 3 security or bonds, and you will have same kind of a chart. So key point is what the chart tell you. If your manager, your staff give you this report, what's the conclusion? What do you can get this? What do you know? What's informed from this chart? Andrew, go ahead. I'm asking. Okay. Okay, that's good observation. I want more. So what else we see from this chart? In this class, yeah.
That the corporate bonds have been the ones paying the most over time since 1950s.
Okay. Okay.
Yeah.
Why corporate bond on top? Means a corporate bond interest rate higher than everybody else all the times. Very. So default risk there, right? Very good. Yes. So because corporate bond have default risk, government, U.S. government bond don't have default risk. Why in the top level? Okay, good. Paying your high interest rate. Because it compensated on the risk. We'll talk more about that. What other you observed? So with very good observation right now so far.
Treasury bills are more liquid than corporate bonds and long bonds.
Yeah, it is because the treasury bill is every 3 months. Okay, what else observed? Still more. You can still observe more.
There's only
William.
one period on this whole chart where the three bonds had a relatively similar interest rate, and that was in around 1982.
That's the old high level, right?
Mm-hmm.
Why? Okay, very good, very good. Somebody help him say, I want to ask you, look at this chart, right? 1980s, when he mentioned that, okay, Bill mentioned that. 80s, what happened to 80s? Why interest rate, local corporate interest rate go to more than 17%?
Because inflation was really high back then.
Why? Very good. Why? Why that? What's happening in inflation there?
They just Nixon left the gold standard.
Gold standard, what else can be? The key point here is, yeah, that's gold standard. Gold standard actually is the World War II already starting to have gold standards relaxing. What happened here? A little bit more than just that. Think about 1980. I know you're so young, but what happened? Why then is interest rate so high? Doesn't matter which interest, they all high. Actually, point out very good. Just there must be something going on. What's going on? You didn't mention inflation, which is good, but why we have inflation there? And he said gold a little bit. Yes, it's a little bit, but the key point is not there. Not gold yet. What's that? Anybody can think about? So then you can know next time what's going to be inflation. No? Okay.
Oil
Okay,
price?
go ahead. Kim, go ahead. What do you want to say?
Maybe oil price?
Yes, it is oil. Okay, very good. So 1980s is global oil crisis, all right? So when we have a global, that moment US is oil dependent, okay? So we are oil dependent country. So therefore, when global oil price going up and inflation pick up, interest very high. Let me ask you again, link to why oil price going to the roof will have high inflation. It is OPEC, but why linked to inflation? Very good. Go to my next question. Why oil price going up then linked to inflation? Yeah, continue. Very good. Yeah, yes. Okay, very good. Very good. Okay, let me give you an example. If we oil dependent country, let's say oil going up, then we get milk, we get water, we get oranges, bread, everything going up. Why? Because we transportation depend on those products shipping to your supermarket. Of course, you're pricing in all of this. So therefore, that moment is inflation. Yes, it's due to OPEC, okay, due to oil crisis because we depended. But then you see, after that, we did a good, we control inflation very well. And we are right now, certainly, we oil independent so far. So we do not know in the future because right now they change the policy. We do not know what's going to happen in the future. But not, at least at this point in time, we are oil independent country because we create our own oil and also we export. Okay, so we do not worry about will be things happen like 1980s then. Okay, but however, you can see interest rate very high. That moment, imagine you buy a house. You pay 17% mortgage rate, that's really kill you every day about mortgage, right? So that's the problem. But that's okay. So this observation, you did a good job. You already see the default risk. You already see the high interest rate due to inflation. One more thing, look at the big picture. You are a manager. You see this chart. And you're going to be making this summary about what's going on and beyond what we just did. One more thing, see whether you can observe it. This chart.
Whenever a 3 month.
Go ahead.
Go ahead.
Yes, downtrend. So can you give some example why though? See, once you have report, right, like this, your boss will ask you, okay, you tell me the trend going downward, and your boss immediately asks you, can you interpret why though? Do you know what reason? So you're gonna be, very good. Okay. Since you mentioned that, I'll touch that, which is good. Okay, Andrew, you did a good job. You link so many things, and then we had to talk so many things. Okay, this is linked to our dollar. We will talk about currency again, the dollar. Okay, you know why our dollar? Okay, so it's too long right now. You know why our treasury bond, treasury security means our government bond. Okay, why our government bond? We borrow trillions. Remember, we just said bond. We issued a bond means we borrow, right? We issue so many bond. So the whole world borrow money, a whole world lend money to us. That's why we borrow money spending. We right now borrow money spending. Okay, so we have a debt deficit, huge. Okay, but why we can't do that? Why other countries say, you know what, I want to do that too. We will like America. We borrow money to be rich, to be everything shining, door, the car shining, house big, everything so wonderful life. We do that too. That's just borrowing. But why other country cannot do that? We did. Over those decade, we can do that because Andrew just touched that topic. It's dollar. Because our dollar before, right after World War II, is settlement oil currency. Can you believe it? This is tricky there. If OPEC didn't choose our dollar as a settlement currency, we won't have this luxury moment to do this, to be so rich by borrowing, okay? But because that, global want our dollar, because they settlement oil, to use dollar. So also our dollar becoming global darling. They all wanted it. So therefore we can borrow, we just keep printing money, borrow money, but to keep doing that. That's why we borrow all the rich to now. Okay, we do not know gonna future what's gonna happen, but the pandemic, you see, we still want to put more money in the system. See, I tell you too much because Andrew just mentioned this piece. That's why I mentioned that piece. Okay, but the link to even more. Okay, because we put too much money, we in deficit huge, and we're gonna put the pandemic money more, gonna come in more. Imagine this. Okay, if you look at the Fed balance sheet, you will see how big debt we have. Problem is, if we increase tiny interest rate in the future, right now interest is very low, right? Almost zero. Imagine we increase interest rate just 1%, then we will pay coupon. Remember you talk about we had to pay. We'll pay extra 1% of those trillion dollars. Imagine that money we have to create. So therefore, in the future, if interest is going up, we're in trouble. We're in a lot of trouble because we had to pay those in coupon, the debts, okay? Or you want to say something, go ahead.
Oh, no, sorry.
That's okay. So okay. So that's what we will talk about that piece, okay? That piece is very important. Linked so many things. So that's why I said this core touched a lot of things, right? So let's summarize this chart first, then otherwise we never finish this chart, okay? Did you see the trend? Look at my mouse moving. Okay, look, this is trend. The interest rate moving together. Doesn't matter the short-term treasury bill, long-term bill. The trend all the way up, then all the way down. So the trend tell you another thing. Interest rates behavior, right? They trending together. So that means interest rate, although you have a default risk on a corporate bond. And the government bond, you can see the government, the long-term bond yield higher than the blue one, which is a 3 months treasury bill, long-term higher than short-term, but also they moving together, okay? So that's another thing. So we will learn those in the later chapter. We're going to have the chart again, okay? At least tell you a lot of stories. See that what I just tell you those things. So that's really is phenomenal, okay? So stock market. So why we learn the stock market and what's the stock market, okay? So what's the common stock anyway? So here they tell you. I want you to tell me. I know you know this. So tell people what's the common stock. Anybody? You don't want to showing, you know, I know you know these things, okay? Anybody?
Common stock is a share of a company's ownership.
Right. So you have an Apple stock, you own the Apple company. Okay.
Yes.
Yes. Very good. Yes. You will feel why I'm here. I'm in the school. I don't own it. I don't do anything. I'm not going to operate it. Yes, you do not operate it, the company, but you own the shares. Means you have a right to say something of the company. You can voting on something. Okay, voting on the strategy, voting for company spending, voting on the project. So ownership. Okay, so we'll talk about more about the stock market and this common stock. What do they mean and how they do the IPO? Who happened the company to IPO? And what I mean, the market, you know, you own a stock, you can get dividend, a lot of things. Okay, we'll talk about more about that. Okay, but at least you know you own a piece of the stock, you have the ownership, but then they based on the percentage, the fraction of your ownership, you can vote a company. If they say you're majority owner of the stock, you can say what do you want to say, because you're a majority voter, right? You're voting on the policy. You can voting on the CEO out, get new in. You have the power because you're holding the majority of the company's share. All right, that's very important. Okay, so a share, just one share of stock, is just a piece of paper, just proves that you are the owner. See, that's why it's a claim of on the residual. So here's the key to mention that, okay? This residual means at the bottom of the corporate structure, financial structure, okay? If you're looking at the balance sheet of Apple, okay, so in the company's top level of the right side of the balance sheet liability side, right, you will see top liability means debts, right? They borrow. But the bottom, it is equity. Equity is stock, okay? Stock is equity. So the bottom, that equity piece is the common stock. Because in the bottom, that's why I call residual. Because when the company, let's say a hypothetical company, if bankrupt, right, they will liquid, selling everything, furniture, building, whatever. After selling this money, they will pay from the liability side, the top levels owner, right? So the debt creditor. So then pay them first, and then they'll go all the way bottom to the stockholder. If you still have money left over, they're gonna pay the stockholders. If you don't have money, they don't pay you. That's why you're in the bottom. Okay, that's why I call it residual. We will talk about then when we have the stock at that moment. Okay, so just let you know, the stock, it is the piece. Now in the past, you have piece of paper tell you own the company, but you're in the financial structure, the last piece collect the company's assets. Okay, so that's what they tell you. But if a company doing well, they make earnings, you're going to have piece of the sharing of the earnings because you have some shares of the company. Okay, so that's the ownership. So that's a stock, but what do we wanted to know? Okay, tell you financial crisis. We always have to link a financial crisis because the financial market important, link so many things. This is the latest crisis. We don't want this to happen again, so we have to learn our mistake, right? So why financial intermediaries, which is financial institutions, allowed, and the banking, because they are in the middle. All this financial market circulate around is the institutions, right? So institutions like bankings, investment bankings, broker dealers, insurance, allowed, right? So that's what they tell you, financial intermediaries. They are in the middleman, okay? You and me, we are just a regular investor, but we need to go to banking. We don't go to banking. Without banking, we cannot put the money in anywhere, all right? So that's what the intermediary. So they tell you right now, see, banking. So banks here, they refer to banks is, like I mentioned, commercial bank or depository institution. Okay, that's what the banks here now refer to investment banking. That's why they accept deposits. Okay, your deposit money there, and you will see your money is not really there. Because remember, if you go to right now, we all stay indoor, right? Once the open, you will see, go to the branch, go to any branch, you will find out that under the basement, they have the vault. Okay, all the cash today, they have deposit money put there. But then tomorrow, those money only proportion stay there. Rest of money, they're shipping out, okay? Because they're gonna use that money, make a loan, lending to somebody else. Now stay there, money never sleep, right? So that's how banks make money. They use your money to lending out to the loan. Maybe they use your money, deposit money, lending to me as a student loan or a business loan, many kind of things. That's how they do business. Okay, so that's the banking referred to the commercial bank. Okay, depository institution, right? So others, like I mentioned, that we have insurance company, finance company, pension fund, mutual fund, hedge fund, investment banking, a lot of, financial market have a lot of financial intermediaries. Okay, broker dealers, like a broker, you have a TD broker, remember, you have Robinhood, those things, those are the financial intermediaries a lot. Okay, so we have to know this middlemen, how they work. So then we know the market, how they function, left and right, means borrower and the saver, how they're working together. All right. So then we have to mention about the financial innovation. Obviously, a lot of innovation never stop. Just like a new generation keep coming, like you guys keep coming. Now you see this game store problem. GameStop, this problem will be make people think again how to regulate them. Robinhood, how they're gonna be, all have to rethinking. And also product innovation. Financial market never sleep. No market sleep. They keep innovation because they wanted to have the clients who invest, who working in this invest in this financial industry. They want a certain product. They have to invent it. For example, right now it's a fintech. You heard about fintech, financial technology. That way, is in developing right now. And you heard about, like in the past, the financial crisis, like mortgage-backed security, CDOs, credit debt obligation. We might mention this more. Okay, remember this is chapter 1. It's nothing serious for you to learn anything detail. This just touch the topic. So they keep innovation, like those products during the financial crisis moment, they invented. And then the regulation cannot even catch up with a new innovation. All right. So innovation never ends because we are human beings. We keep creating new things. Okay. So you also same thing. When you're in this, manager level in the market, you will figure out same thing about how to, take care of those innovation, make sure properly in the market. So that's the whole point you needed to know. Okay, but you should know innovation never end. Okay, so variety and keep going on. Okay, this one I want to show you, very interesting one. You tell me. This is another chart you observed. So you tell me what you see, what is your conclusion? No, you don't see anything? You don't make a conclusion, anything, anybody?
The market has grown, the price of the market, the index, the price of the Dow Jones Industrial Average Index has grown a lot since the 1950s. Right,
very good. It's linear? Is it growing in linear or non-linear?
Not linear. It goes up and down.
Exactly. Look at let me show you my mouse, okay? Linear will like this, okay? Linear, just this linear, okay? This is linear. But this is exponential. Look at this 1950. Remember I mentioned Warren Buffett. Oh, he's the only one I didn't mention to your class, okay? Warren Buffett. Do you know anybody who's Warren Buffett?
Yeah.
Yeah. Okay, good. You know, as long as you know, okay. So Warren Buffett is the only one who become a billionaire from investment. Okay, just like this. Okay, so he started actually before 1950s. Okay, imagine he invests money just $1 here. Look at this compounded. Okay, even though this volatility and this 2008 crash, you know, even this crash, you can see over 50 years. So that's why timing is very important. It's compounding, okay? So that's why if compounding like this, and this is exponential, right now, okay, today must be here, okay? In here, in my mouse here, higher. Today is the all market index going up the record. So it's here already. So all the past loss all come back already. So that's our stock market. So this tell you stock market, if you do invest it, it's risky, but it's a good thing. Risky depend on where, right? If you're here, you down here, it's risky. But if you can sustain it, you right now back to here. All right. So that means the risky depend on what do you mean? If you get a margin call, you're definitely risky. If you're holding long term, like a 90-50 here, you're holding it, I think no risky to you, right? So then depend if your grandfather put the money 90-50, now 90-50, it's just 1960s, $1, you're already super rich right now. It's like I mentioned, if several, maybe just 20 years ago, you buy Amazon, $8 per share, and right now maybe already multi-million, right? So a lot of things changing. Stock market is really like this, okay? So like I said, it's a good thing for you. This game stop, okay? It's a good thing is make you all wake up, invest it. So many, like I say, it's before I always wanted to women involved in investment, know how to manage your money. Right now, more women, they do the statistics showing that women also percentage-wise also increasing involved on investment, which is a good thing, okay? And so have something invested, you can see you're young, you have time, so you can see this chart tell you timing is important, right? It's long-term, that's why people keep telling you, long-term invest. Long-term is a good thing, but nobody can timing, but long-term is a good thing to put money invest, okay? So stock market, that's why people are exciting, because people remember, US people retirement, people 401k, people mutual fund, link retirement, all is in the market, okay? Bond and stock market. So it is important to people, link it to us. That's why the Fed have to consider, even though they said they don't based on the stock market to make decision, but they do watching what's going on, because I link to people's money retirement. It's very important, okay? So I mentioned about a crisis. Financial crisis very interrupt, people's business. And that's why it is important Fed and any manager should be understanding what's going on to the market, right? So that's what a financial crisis. What do you mean crisis? See, disrupted. So financial market, like normally functioning channel of funds, suddenly the market disrupt things. Nobody lending, nobody borrowing, nobody do anything because they don't lending to you, and you cannot open business, you cannot do anything. That's dysfunction, okay? Nobody can do anything. That's not right thing to do. Right now is we let the people shut it down. That's why it's another problem, right? We tell people don't do anything. But the financial crisis is that nobody tell you, nobody lending you anymore. Nobody do business, nobody buy things anymore because a crisis interrupted, okay? So that's what is not a good thing. We want to try to prevent this thing happen. So once that happened, you can see major disruptions. So no banking, lending, no restaurant open, nobody have job, because everything closed means nobody have job, you know that. No job, no spending, right? And no money. So worse and worse. And this is becoming global. Financial crisis 2008 is global. So that's the problem. We'll talk more about that. So why? Here's, okay. So why is the monetary policy, right? money, it is power. Really, really is power. You say knowledge is power, and then next one, money is power, right? You have money, you don't need to worry, you can do anything you want. You have freedom, financial freedom. But the thing is, the money, what are we talking about? It's money supply. It's the economic system that money circulate around, how that works, how monetary policy affect you and me. And that's why we want to know this, okay? So they here try to tell you the money play important role. You all know that the money, it is, if not play important role, why pandemic, everybody argue about give money, how much money they fighting every day. They're still fighting, haven't given money yet, they're still fighting, okay? How much money give to people still fighting right now. That's how important it is, right? More or less, whatever. So that's important because people need the money. And meanwhile, the other side worry about, like I say, if a tiny interest rate going up, we're going to pay a lot of money to globally who have our bond. That means debt. So our deficit, remember we borrow money. So that pay a lot, that will be whole our GDP eventually will be do nothing, just pay out our coupon debts. And that's why it is worry, right? So a lot of argument, what are you going to do? So that's the problem, okay? Recession. Obviously, recession, we happen all the time. So we will show you the chart. But recession, it is a problem calling people. Right now, we are in the recession, okay? Let me tell you, right now, we're still in recession. What do you mean recession? Recession means recession, okay, normally official definition now have to be serious way, but it's a 2 consecutive quarter negative GDP. That's recession, okay? So we are in a recession, but this is just definition, doesn't matter anything, all right? So recession coming, that means employment, right? You can see we have millions and millions of people lost a job during this pandemic, okay? So that's why people, needed to go back to work again, get job done. That's be better for our business, okay? So that's why it's a problem, okay? Recession, after recession, we will be better and booming and people have job, it will be called expansion, all right? Means everything booming, gonna be everybody get a job, business booming, landing is open up, people make more money, that's the expansion, right? So we're gonna talk about that too. That's called business cycle, we do that. And then monetary theory, okay? Remember, I told you, say, we have armies of PhD graduate, right? Economists working in the Fed. They do research on monetary policy to affect the economy. So then based on those theory, and they're going to start make decision how much money at this point in time should put it in the economic system, right? So right now, that's what they provide money supply. So that's what based on the research and based on the past experience, right? So then what are they doing? So monetary policy, that is a theory, is very, very important, okay? So that's another thing. And when they put more money, we worry about whether will be have inflation, that means the price level going up. So that's a lot of things that they need to worry, they need to concern, okay? So that's another thing. So next, money. Like I say, you can see the recession and expansion. That's the business cycle. We always have it. And we also have to consider inflation, just like right now. If we give everybody's money, people can out of a pandemic, but what about inflation? Okay, we always have the both ways to think about it, okay? So that's why we say is what's the inflation if the aggregate price level keep going up, right? So that be becoming a problem. So that's what they say is the price of goods and service. If this price keep going up, it's called inflation. All right. So we're going to talk about more. You're going to learn more about this piece. Okay. So here, turn to continue rise in the price level. If it's just one time, it's okay. But if continue, what do you mean continue means if tomorrow you go to buy a cup of coffee, it's $2. And then after tomorrow, you go buy a cup of coffee, it's $4. And after that day, it is $10. That's inflation, okay? If just one time, it's because of a price adjustment, that's okay. But if it continue like this, that's inflation. So that's the problems. Okay, so that's what I need to worry. And in the real world, happen a lot. Okay, we'll talk about that. For example, I just give you one hint. We're almost done this slice. Do you know which country have ever have hyperinflation?
Yes.
Germany.
Okay. Yes. Very good. Okay. So tell me what's their price versus dollar. Anybody know? The ratio, the dollar versus their, you said Venezuela or Zimbabwe, either way. Anybody know? $1 versus their currency, how much it is during the inflation? Okay, let's
3 million.
Okay, yeah, okay.
Yeah, it's like a million bolivar.
In 1923, $1 American dollar was worth 1 trillion German marks.
Yes. Okay. Very good. Yes. When you have inflation like this, I have example. Zimbabwe. You will see the chart very soon. There, a couple of years ago, the $1 equal to 1 trillion. So my friend from eBay buy the $1 trillion Zimbabwe currency. Say, honey, I give you a gift, 1 trillion. So can you believe 1 trillion equal to $1? How much money you print? So that's a lot of things. So that's called inflation, hyperinflation. Okay, so many countries happen. We'll talk about that too. So that's very, very important. So that's what data showing you everything. We will see there. Okay, so inflation, we definitely care. Okay, so here's just one more. This is one more chart we done. Okay, so you can see the bar. You can see the bar? Yeah, the bar is recession. Okay, the bar is recession. And the green, the line, the blue line is the money supply growth rate. Okay, money two. Remember, okay, we'll talk about this. We will talk about money one, money two. Okay, money one just money supply, very, very liquid one. Money two is money one plus less liquid one. And then you have money three, money four, just add on more unliquid compared to previous one. Okay, so that's how the category of the money. But don't need to worry. Just know money too is money. Okay, just which add in the items there. Okay, so here the green one is money growth rate, means change. Growth, you know, is a change of the money. Keep going up, going down. That's a change of the money over this recession and not the recession period. So we will debate, and same thing like before. We see the chart, see the fact. Then we have to analysis, then we make a conclusion, then we know what I mean about this money growth rate versus recession. Link and not link, how they link this kind of analysis. Okay, this is just the beginning. Remember, this is chapter 1. Everything just touch a little bit, just leave. Touch a little bit, leave. They never give it deep. Okay, but at least we're training ourselves how to looking at the data, how to think broadly, linked to the real world, which is good. Okay, so we stop here, and then we're going to talk about next week. Okay, have a good weekend, everybody. You did a good job.
Thank you, you too.
Thank you.
Thank you. Bye-bye.
Thank
you. Have a good one.
You too. All right.
Professor, question.
Yeah,
Are
go
you
ahead.
gonna pause the recordings? Because you say you're gonna do a poll or something today to see if you're gonna post the record class.
I said the record is debatable. I do not know recorded yet or not, but I will double check. But I don't think we recorded yet. I do not know. So I will find out. You want us to know recording or not, right?
Yeah.
Okay, I will double check. But like I said, it's debatable whether, because people don't want to be recorded. So that's why sometimes we do not know whether we should or not, but we will find out. Okay.
Okay.